Good morning and welcome back to Almus Market Mornings. It was a day when the carrot and stick strategy from the Trump administration was quite evident. While releasing the names of the countries to which letters have been sent, President Trump also suggested he was open to additional negotiations. While JK will cover the exact details, let's look at the market moves yesterday. So dollar showed a tendency to strengthen, but that reversed. Euro regained the 1.17 level after breaking lower briefly. Yen weakened by over 1%, and interestingly, there is a significant move in the 30-year Japanese yield, which has crossed the 3% mark, rallying 16 basis points since yesterday's open. Good morning, JK. So we have the first set of tariff letters. As of now, it seems India is doing fine. What are you expecting in the next few days? What should we be in the lookout for?
Morning, Swaraj. So I think, as you said, the first set of final tariff is being, communicated, has been communicated to 14 countries, and most of the rates were not too far away from the rates that they had announced on April 2nd. And as far as the other countries are concerned, Europe is said to be in final stages of negotiations, but there are differences. India, as we shared yesterday, I think there can be only a mini agreement, and of course, the tariff rate is still suspense. It can also Treasury Secretary said that quite a few deals will be announced in the coming days ahead of July 9 deadline. In any case, the new tariffs which are announced also would be effective from August 1. Now, the point is that there is some leeway for negotiations before August 1. In fact, Trump said that he may adjust tariffs for some countries and depends upon a vague statement like depending upon their relations with the US. And he has also opened to other ideas. I don't know what these things mean. And there, he's also saying that August 1 deadline is firm, but not 100% certain. So I think there is no final word on the tariff as of now, despite all these letters. So we really have to keep our mind open on any changes. And there's no need to focus only on tariff because I think this will be a long drawn process. Uh, my sense is that even after August 1, there may not be complete clarity on this. Yes, if you go by what is decided yesterday, the countries on whom the tariff is announced, they export about 450 billion of goods to US, and keeping some 20% tariff on an average on these countries. The US will be earning about 80 billion in duties. So if you extend, say 15 to 20% on overall import of US by about nearly about to 4 trillion. So that will be substantial revenue that US will be looking to earn. And this can be one factor. So eventually, if it does settle there, I think it can be one factor that can mitigate some of the fears on the deficits of the US. So that is what I am looking for. I think we should wait for all these the dust to settle down in the coming. I think it can take some months, probably 1 or 2 months before we have the final. In the meantime, even Japan says that we are still negotiating with the US. So that's what I'm saying. This is despite all these letters which about which there's so much of talk, there is little that you can conclude as final word. We'll still see the final picture only after some weeks or even months also. So that's the reason why the stock markets have also not taken it badly. Although US stocks fell, I would put US stocks falling to the reason that people come back from holiday and see that US trades are trading at all-time highs. It is too tempting to take profit on something like a Nasdaq or S&P 500. Which are actually down 20 to 30% after April 2nd and recovered to new all-time highs. I won't fault any investor for taking profit on them, particularly when we are heading into a new earnings season very soon. So that sentiment is carried on to many other stock markets also. But Asian markets, if you look at it, they've actually been on the positive side. Perhaps this level of tariff was expected by the respective countries also. In fact, South Korea market is up more than 1.5%. There's just a special thing that's happened in South Korea. The government in South Korea has announced that it will begin distributing cash handouts to all citizens from July 21. This is a free money that is being distributed. It follows a passage of some 31.8 trillion won, budget, supplementary budget that is approved. So it's a boost to consumption, and that actually money is again going into the stock market and boosting it. So overall risk assets not so much threatened after yesterday's decision also. As far as the dollar is concerned, yes, I think it is again more to do with the technicals rather than this fundamental, because I don't think this fundamental factor is still decided. There is also the factor of how the monetary policy will evolve if the tariffs are going in this direction. So currencies are actually slightly lower only because there is some profit taking in the dollar short positions. In fact, technical charts show that there is some momentum building on the upside for the dollar. It could carry to another 1% plus. That can be expected, not because of any fresh positive in the US, but because of the positioning in the market. As far as Indian rupee is concerned, surprising move of more than 45 paisa yesterday intraday. It did open with a small gap, but kept going up. Some factors that played were, the 10% 10% tariff that Trump threatened to impose on countries that are supporting the BRICS, saying that anyone who is acting against the interests of the US, he will be imposing. But again, he has also said that this will be not effective immediately. And then we also had the dollar index, which had bounced, that led to the USD INR seeing some bounce. Stop losses were also triggered at 85.80. So I think it was a surprising move, but the reasons were not very, very strong. But still, I think market positioning was more reason, because last week we had seen a breakdown, and possibly some of the market men were short. So we are now in this new range between 85 and 86. 86 levels also brought in some selling from PSU banks. I think we very much focus on what the dollar index does from these levels, and very likely the dollar index can put in some recovery. Once again, to reiterate, that is more based on positioning rather than on any fundamentals. But in the meantime, we also see the yields on the US bonds, and almost every other country has been rising once again. I think this is based on the expectation of inflation going up. Japanese 30-year bond hit 5% rise yesterday. And despite that, of course, yen was weaker because of tariff threats. Uh, Also, on the oil, yesterday we shared about a more than expected increase of output by the OPEC. But despite that, oil prices have actually gained yesterday. This is based on perception that the demand is actually on the rise now. And anyway, this output increase is only a restoration of output cut that was announced earlier. So this can also be a slight negative factor, because oil is once again started to go up. That can be a slight negative for the INR. But overall, I think until we get more clarity on the tariffs and the data on inflation in the coming months, some analysts saying that from July onwards, we'll see the reflection of the tariffs, the basic 10% tariff that is already in force, that will reflect on the inflation number. So that is what we are looking forward to. Until then, a technical bounce in the dollar is what we are expecting. Thank you.
Thank you, Rick. And I think with respect to tariffs, some of the major countries which have gotten tariffs imposed is Japan, South Korea. I think 25% each for both of them. But despite these letters, there's still negotiations ongoing. At least that's what the Japanese have said. So there is still room for these tariff rates to be revised, changed. So it's all over the place as of now. We'll keep you updated with the latest changes. Asian equities today seem positive. Surprisingly, the South Korean market is up 1.5% after the government announced a cash handout. When it comes to our domestic markets, rupee saw 45 paisa move yesterday, weakening against the dollar. One factor may be the Trump's threat of 10% tariff on BRICS members, along with the bounce in dollar index and stop losses being triggered. Overall, I think oil prices and dollar index needs to be looked at for the next set of move in the USD INR. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates from the markets.